Hello and welcome to Leviathan News. Today is July 6th, and we got Noah is here along with
Hey
Windmoon.
guys,
Special guests.
GM.
Good morning. Also, Garrett's back, but Garrett's in Barcelona, right?
Si, senor.
Si, senor. So, Garrett, are you going to ECC? Stable Summit?
I am. Sorry, we, monsieur.
Well, that's coming up. That's next week, isn't it?
10 days, yeah.
10 days, yeah. But
Absolutely, yeah. I'll be speaking on risk factors and stablecoins. So if you're headed to ETHCC, come on by.
oh, fun.
nice topic.
Yeah. So the big news of the day is that BlackRock's Larry Fink went on the news as a talking head the other day and pumped up Bitcoin.
He pumped that back, and then he dumped them again.
We were so back.
Aside from effects on the market, it's good to hear words from people, which is literally just a very general statement. So anyone that has comments, it's important to hear what they're thinking. And that hopefully gives us a little insight into what they're doing. What people say gives insight into their actions. So I thought his words were interesting, particularly that he talked about it's not a U.S. investment.
Mm-hmm.
It's global. That's what stood out to me.
China.
China.
Like my Trump.
Everything.
My like Trump impersonation there. So back in 2017, Larry Fink said that Bitcoin is an index of money laundering. And now he says that Bitcoin is an international asset. So much has changed. He probably sees the fees that can be extracted and is would like to pull that into BlackRock himself.
Isn't that okay? It's business.
Yeah. Is if
All right. So
yes, yeah. Go ahead, Garrett.
So as a person who doesn't really understand how TradFi works, the basic idea with this, right, is if they start selling their ETF, like people buying and selling into the ETF wouldn't affect the price. The price would move ahead of time when BlackRock purchases a bunch for their reserves. Is that right?
Adjusts.
Yeah.
So it's theoretically possible they've already bought a whole bunch and there will be absolutely no effect on the price as a result of this.
It's probably the case, but it just opens it up. It creates like the first registered product that people can buy instead of having to buy that terrible GBTC product.
Yeah, there's too much of a disconnect with the GBTC product and spot price. There's still a disconnect with the ETF and like the asset, because you have to wait for the knock-on effect of the fund to adjust its holdings.
Mm-hmm.
But there's no way for anyone that's regulated to own Bitcoin unless they're outside the scope of like a cookie cutter compliance shop. So as I said earlier, there's no ledger devices in major hedge funds and brokerage firms, but no ledger device sitting behind a Fidelity account to buy Bitcoin. So this type of product offers that kind of, as close as you're going to get, kind of access.
So a couple of things about the BlackRock filing. BlackRock is 575 to 1 on their win-loss record for filing ETF applications. And Larry was asked about this, and he said that we have a good track record of working with our regulators, but the win-loss chart speaks for itself.
Oh, that was him flexing right there. It's like, what are you going to do, SEC? Just prove the damn thing.
So he said, we are a believer of digitization of products. ETFs are taking over the mutual fund industry, and that if we can create more tokenization of asset and securities, it can revolutionize finance again.
What did they say in that scene in Mr. Robot? He said we could start creating new assets to rebuild the financial system. They love creating assets, and whether it's fiction or reality, Creating an asset allows you to sell a product, and selling a product allows you to capture fees.
Jeez.
So
Yeah,
business.
especially as a what do banks love doing more than anything else? It's selling you stuff that you get to take risk on.
Indeed, it's all
And-
kind of gross. It really is.
So now that we've gotten the big macro stuff out of the way, and it seems like the ETF is probably coming, let's talk about GBTC. Actually, I know we didn't have this in the headlines, but GBTC has been making a bit of a run recently. It's off the lows of its like 50%. I think it was like 50%, 60% down at one point. And now that gap is actually closing again. So I believe it's had quite a run up in the past few weeks, as the expectation is that potentially GBTC is going to be allowed to convert into an ETF around the same time that BlackRock is going to be able to gain theirs.
Apparently, there's going to be like 30 spot ETFs that are going to successfully just unload on the market. I mean, listen, GBTC is just responding to price action. All these vehicles are, as much as they're, it's not a futures, which is literally just price. There's no underlying Bitcoin. Does that mean anything from the perspective of these products?
Mm-hmm.
I mean, they all are completely divergent from the thesis of Bitcoin to have a bearer instrument. Because if you're in a trust, if you're in an ETF, a spot ETF, you don't have your Bitcoin. You're still dependent on a counterparty. So, it's responding to price.
So 1 month ago in June, the discount was sitting at around 40%. And now the discount has closed to 29% just in the space of a month.
Wow.
That's a huge expectation that this ETF might actually be coming sooner than we think. And I think the knock-on effects of GBTC Premium closing back to zero would be pretty far-reaching, because that was the main reason that everybody blew up in the first place. This chart, if we go back, let's go back. This is the reason that everybody blew up.
Yep.
And if we get a return back to normalcy with this specific product, maybe we can heal some of the wounds in all of crypto land. There's still going to be people going to jail and lots of funds blowing up, but if the discount can go away and we can get like 1-to-1 GBTC for BTC, or maybe like close, right? At least within a couple of percent. A lot of the issues around leverage and lending maybe magically heal.
It's interesting. This chart and GBTC in general is forward-looking. Why? Because of the risk premium. You don't have, it's not spot, so, and there's the discount to the NAV on the books, and it's as with all of them, it's not spot. You're not exposed to the core thesis of Bitcoin that you have a bearer instrument, not your keys, not your crypto type stuff. So for anyone to be that interested in that product, they're overcoming the counterparty risk, the discount to NAV, to get exposure to the price point. So it's forward looking with regard to price, I would argue.
Yeah, can we talk about the failures of the SEC here? I would say that the regulatory body's allowance of GBTC to trade down to like a minus 50% NAV is probably one of the biggest failures of the past cycle. Like it wrecked so many people, and we would not have had these like cascading liquidations had the SEC just allowed them to flip it into an ETF style where like BTC can go in and out. Just madness.
Everything, well, they do many things. They do a lot of fraud, and I've seen, if you look through their Twitter, they're taking down a lot of bad people. So I
understand, but like the premium on GBTC was so high for so long that like back in 2020, I remember talking to some like rando institutional people that I know that were like taking the GBTC trade because you could make 20 to 30% like risk free at the time, and all you had to do was hold GBTC for 6 months, right? And billions of dollars was made on this one trade, and then all of a sudden it flips, goes negative, and like the whole thing breaks, and it breaks all of centralized crypto lending. Celsius was caught up in it, FTX, Gemini, like everyone, Barry, everyone. And if GBTC hadn't broken, we wouldn't be here like talking about a lot of this stuff today. Celsius probably doesn't happen. Like the whole Gemini stuff doesn't happen. I don't know. Maybe some of the FTX stuff like just goes on longer. It's really hard to say.
So the failure of the SEC, while they do the good things, that was the point. Just the little point. The biggest important thing is what we've learned in modern day software, how fast things move, fail fast methodology, iterate, quick response times, be productive and work with organizations to pivot and make changes, be nimble, adjust. They are rigid. They are binary. They are analog. That's the failure of so much institution, not just the SEC.
I mean, a lot of the blame, Sam, you're muted. A lot of the blame, I think, has to go squarely towards the Biden administration's policy. They've had a fatwa against cryptocurrency and Bitcoin, and look where it's gotten them. Like the economy is garbage.
Yeah, whatever. But like the whole like GBTC thing was still happening during the previous administration. It was like a follow on from them. So this isn't like a singular thing. Speaking of Mashinksy, though, we reported this yesterday that the CTF investigators conclude that crypto lender Celsius and Mashinksy broke the rules, and they're probably going to get the ban hammer pretty hard come soon. Mashinksy, great guy that he is, defrauded investors and is now being looked into by the SEC and the U.S. Attorney's Office. So this is going to conclude Jailcast for today.
Where is he right now? Is he on the run?
No, I think he's in the States somewhere. I don't think he ran.
He should stop fucking running.
Yeah, it's not Kyle Davies and Suzu.
But the New York Attorney General says that Mashinksy made false statements about the safety of the crypto platform and misrepresented the declining financial conditions of the company. And he defrauded more than 26,000 New Yorkers out of billions of dollars of investments. So
people, humans, emotions, you can imagine him doing those things. He probably wanted to do right so bad that he's like, what the hell else am I supposed to do? And this brings me back entirely to my thesis around immutable contracts. I'm tired of humans in these types of being put in these types of positions. He may have wanted to do well. He was forced to do these things to try and keep it going. You can imagine spending years and years on a business and seeing it on the verge of falling apart, and you're forced to do questionable things, ethically, morally, stuff like that. What else are you going to do as a human?
Jailcast is so fucking depressing.
Yeah.
Let's talk about our friends of the show, right? Let's look at some of these. Okay, so let's go back. I actually should have been looking at these comments, right? So here's Loki Beckon saying that Larry Fink calling himself the man of the people. What a joke. These disconnected boomers disgust me. If only they weren't in charge of the planet.
My favorite part about that when he was talking about how like he's interested in this because Bitcoin democratizes access or wants to democratize access. It's like, come on.
Well, it's not possible. He can't offer a product that does that. That's what it is.
Yeah, it's just,
democratizing access to price. to gambling, that is nothing what Bitcoin is trying to offer.
I know. Democratizing access to money laundering. So friend of the show, Pendle, has hit over 125 million in TVL. Right? Pendle token has just been on a mission recently. So I guess people like the whole idea of getting fixed floating rates. So good for Pendle. Very nice team.
Yeah, big, to be able to get this kind of traction in what's been not a good market for DeFi with liquidity still kind of flowing out, like great job.
So another thing that happened, and DeFi Advisor is not here today, so we can just talk about it without him, is that Israeli lawmakers are supporting acts in crypto capital gains for foreigners. All those Russians who have run away from their home country to Israel might now be able to start trading tax-free.
It's an incentive for capital inflow. I mean, look, it's the same concept with El Salvador. The tax havens, not even just crypto tax havens, just how do we get billions of dollars to flow into our country so that us as a country can do exactly what we were just talking about with regard to BlackRock, is capture fees.
Okay, laundry list of countries that are competing for this. You see Hong Kong, Singapore, UAE, UK. Meanwhile, US is chasing its devs out. So there's an ample supply of crypto capital, developers, talent, brains, just big countries making big moves. Yeah, positioning themselves for the future.
So speaking of positioning for future, Abracadabra DAO, aka Magical Internet Money, it's talking about a DAO legal framework where they want to set up a company, centralized entity, who can handle things like paying for hosting, developer salaries, other things, and that they want to set up. They don't really know where. They're going to propose 4 jurisdictions, and maybe have like a none of the above, but essentially move a lot of the IP into this company.
Yeah, I've always had a high opinion.
This sort of stuff is needed, right, in terms of for enforceability, right? We've seen problems with that with like GMX, right? And GMX is GLP and GMX is V1 forked into oblivion. So they also did a similar, they also took a similar stance, and I supported them for it, right? Because of course, forking is all fun and games, but at the end of the day, if devs have spent like 9 months making a product and then somebody comes and puts a token on it, it's not exactly going to foster innovation. So, it makes sense to basically protect the DAO. And that's what these things should be for, right? Like the DAO is there, but how do we protect it best? I'm not a fan of centralized entities generally, but I know where and when there is benefits to them.
Yeah,
and it makes Gabe Shapiro's article on the Borg concept look absolutely prescient. He wrote this 100-page, maybe 1,000-page treatise on how DAOs can keep decentralized but still spin up these tentacles that kind of touch into the real world and will protect IP or register for a website or just handle any kind of off-chain transaction. So we got to get Gabe on the show.
Or just indemnify their
call
users.
him a friend of the show.
Indemnify their users against being a unincorporated. What was it called? The whole thing that UkiDAO had, right? Where
that's a real problem, right? Because that sort of stuff sets precedent where it's well, now that I own a token, I can be have a lawsuit against me. What the fuck, right?
Yeah.
Or even obviously the contributors, right? So it kind of goes both ways. So then you're at a point where, okay, the DAO is getting fucked, the contributors are getting fucked. Should we maybe start to look into these things? And I think, yeah, Gabe, I'm a huge fan of that Borg structure. So they're proposing 4 different entities. I don't know if Cyborg or whatever Gabe is kind of proposing is one of them, but I would be more than happy for them to kind of take that. Wow.
Yeah, I think it's necessary. You don't want to go out there and just be completely waving in the wind. Yeah, so good for them. Good for them. All right, let's talk about Silo Finance. Actually, so Plutus DAO came and deposited 200,000 ARB into Silo Finance, which is a isolated lending protocol. Essentially, they deposited in, and they only have exposure to ETH and USDC after that. Fun
So
security.
I'm curious about, is this part of their treasury, like what they got in terms of an ARB airdrop?
Yes.
Or is this part of the actual product?
No, it's from their idle treasury funds.
Okay. Okay.
airdrop,
Well,
yeah.
then
If we had
it's great, right?
if we had Ahem on the show, I might be getting this mixed up with my other stream.
No. Yes. Yes. No. Actually, yeah. I think we did one of the first guests, right?
Maybe. Either way, we should have him back to talk about it. It's great stuff. Silos just keeps knocking out of the park.
Yeah.
Yeah.
Same with Plutus.
What do you guys think? I mean, do you think this is? They say it's a better way to park idle treasury funds.
Better than what, right?
I don't know.
Like, good question.
What do you think?
It's all about risk and reward. But putting 200 ARB, that's a big deposit. So I expect they're not going to be earning much until somebody starts borrowing. And yeah, I mean, we'll have a look, but in terms of risk to reward, Silo has been out for a long time. It's been audited as well.
Mm-hmm.
And it's isolated, right? And isolated markets in terms of lending is good because you have less risk, but also you're probably going to get a lower APY. So yeah, it kind of just depends on where they're positioning in terms of that, but they have a lot. So to me, it looks like a sound strategy.
So the borrow rate for that ARB is about 1.75%. Plutus.
But what is the supply rate?
Supply rate is 0.37 at the moment.
Yeah, so not too much, right?
Marginal.
Marginal.
Yeah.
It's parked, and the principal is there if they need it, and that's their balance sheet.
Yeah, and there's also the Silo rewards, right? They're going to be earning on top.
They'll earn another 0.8% in deposit rewards.
Yeah, so 1%. I mean, at some point, what is your security risk discount or whatever, right? 1% is pretty low.
These percentages.
Yeah, it's like I personally am like, yeah, for 1% I won't move,
For 1%,
Yeah.
1% I'm not getting out of bed. 1%
Exactly.
you were going to treasuries. So the RWAs, I mean, it's going to be an interesting couple of years, especially as they're forced to roll over the debt. Well, like macro stuff over the next couple of years. They got to get the rates down so that 1, 2, 3, 4% in assets, like what we're talking about, is meaningful to keep a system going.
Yeah, but what do you think? I mean, like, okay, you have a lot of ARB from the ARB airdrop. Like, what do you do with it? Like,
Exactly what they did.
Yeah.
Bear in mind, that's not necessarily the most reasonable financial decision for that kind of risk, for that kind of yield. You have volatility of the asset. I don't know. I can't. It's impossible for me to speak from a personal perspective, but none of the assets are worth the risk to be exposed to, considering risk-free rates where they're at. That's complicated.
Yeah.
Exactly. It's a very complicated equation, and especially if you're looking at these risk-free rates. What is your risk premium, smart contract premium, everything? Yeah, I definitely agree with Noah, right?
I mean, so what? Like, if you had $1 million ARB, like, what would you do with it? Not financial advice, but like,
You want to know what I would do with it?
We would we are LPing some of it, right? So the volume is really high with ARB, or has been high for some time, and I expect it to kind of stay that way. Even we're at the bottom of the market right now, so we've been LPing it. We've been earning a great yield on that, but obviously it comes with more risks and more active strategies that some, like lending, is just put your assets there and then forget about them, right? So
I'm not gonna believe any of these numbers over a longer period, but in the last 24 hours, ARB USD has made 32% APY, and the WETH ARB has made 13% APY at the 0.3% fee tier. So it's pretty good. I mean, it looks better than 1%, right? But obviously, there's more risk, and could end up with less ARB than you start out with.
The LP exposure, that's decent, because you have impermanent gain protection as something I've historically talked about. But that whole impermanent loss and permanent gain is very complicated, just as you said, from where do you end up after all the numbers crunch after a year or two of LPs going back and forth. What is the best way to outperform? So obviously when the price depreciates, you're selling into stable. So you're selling a depreciating asset for something that's not depreciating. That's the whole concept of impermanent gain, the antithesis of impermanent loss.
Yeah.
But it's complicated. There's a lot of moving parts, and simple is usually the easiest to manage.
Mm-hmm.
Yeah, but I will say I think for Plutus and Silo, this is probably not just a yield strategy. It's probably like a partnership, building infrastructure, whatever. Like if they have a stronger partnership, maybe that'll pay dividends down the line, which is always.
I agree with that. That is an excellent point. That is worth risk to express a narrative regarding Arbitrum, regarding partnerships with other protocols, and that is often a worthwhile capex, and risk is kind of a form of expenditure or exposure to risk.
So it's interesting that I'm looking at the Plutus DAO website, and you can convert your ARB into Plutus ARB, and they actually pay 5% on it, 5.5%.
Aggregate revenue.
There's no redemption right now, right?
Yes.
So even though which is kind of interesting because it's liquid, like it's not like CVX and Convex, right? CRV and Convex. CRV is locked, right? But this ARB isn't locked. I guess they're going to be turning on the redemption soon. But I've been like playing this like liquidity pool. They have this like liquidity pool that's like always trading at a discount. So yeah, when the redemptions come back online, hopefully that'll close that gap.
So what you're saying is you buy cheap, hedge, and wait for the gap to close.
Well, that's my strategy, but obviously no financial advice, right?
NFA people, NFA.
Mm-hmm.
Yeah, so interesting. I mean, the treasury dynamics are always interesting, right? Especially when you have these like worthless governance tokens. Like what to do? Like you have other protocols like 1inch, right? So 1inch yesterday dumped 11,000 ETH to test Fusion transaction features.
We're testing liquidity.
Testing liquidity.
Heck of a protocol those boys built.
Yeah.
A little hackathon those couple of years back.
Mm-hmm.
It's just so corporate nowadays. It's just a big corporation.
So they said, our team is testing the new feature in Fusion mode. This is by Sergey Kunz, who said that it's possible to use custom presets to set duration, start, and end auction amount. This kind of strategy is very helpful for rebalancing assets for DAOs, hedge funds, investment funds. And based on the results, the trade was executed with better average rate compared to just a market swap.
Yeah, they're on the forefront of aggregation. I would say they're ahead. Time is everything, and they're much further ahead than Uniswap with regard to aggregation.
Mm-hmm.
They were the first. We were using that in 2020. Interesting.
So, one last thing to end up on. So NFT creator revenues are down like a lot, hitting 2-year lows in the month of April of 2022. Royalty payments peaked at 28,000 ETH. Now in June, there was a collective 2,000 ETH that was earned. So down 90%, down bad. This has greatly affected the NFT markets. obviously Blur and OpenSea have been the primary contributors to this downturn, as they've reduced royalty fees down to 50 basis points or 0.5% for all trades. And sometimes Blur doesn't even have to enforce those, because if you do what we talked about yesterday, where you're like get stuck with the asset from liquidity providing, you can just take a loan against it in Blend, and Blend doesn't actually charge any royalty fees when it auctions off your NFT later on. So yeah, interesting dynamics. I've heard many discussions about these royalties. In a mercenary system, it's very hard to enforce them. We've seen OpenSea try to like block creators or like block accounts from accessing OpenSea if they had been getting around royalties, and that didn't work. They just go to different platforms. We've seen like rappers, we've seen all sorts of stuff, and so I think there's a idea that royalties should be in place, but there's no real way to enforce it. And I don't know if they survive, other than having this like 50% or sorry 0.5% fee that OpenSea and Blur charges as like a tip, right?
It's a race to zero. It's the same thing with AMMs.
Exactly. So that, like, it's just, if you go other places, so if you go to like Tezos, which is like one of my favorite places to buy and sell NFTs, they have creator royalties. However, those creator royalties are only enforced because there's no competition. And if there was competition, maybe those rates would be lower.
Of course. Competition creates deflation.
Yeah. So I think that's going to wrap it up for the news today. There was some other stories about, StarkNet is launching a Quantum Leap upgrade on July 13th. And I think it's about it. Kind of a quiet day, actually.
I like when I hear about StarkNet. It makes me think immutable type stuff, and I think that's big stuff.
Well, actually, I know what I want to talk about. So this is pretty cool. So there is like, okay, so I want to talk about Frax, obviously, but Frax has done something that no other business has been able to do in the entirety of human existence, and that is to be able to have a live block by block balance sheet of its entire assets.
I can't. It's beautiful.
I know. So I had somebody actually call me about this, a friend of mine, and he said, this is just so revolutionary. Think about it. We spend like billions of dollars every single year, like just for earnings season. 4 times a year, companies put all this work into issuing 10Qs and 10Ks. And now Frax has a truly transparent and fully on-chain balance sheet that adjusts every single block and is up to date by the minute. And nobody else has this. Not even Maker has this, because Maker has off-chain assets. And so you don't know what's happening with those off-chain assets. Even though it's only a few $1 million, not everything is on-chain. And so you can't have those block-by-block updates. But Frax does. And so this is awesome. This is so cool.
This is the forefront.
I got a question about this, since I have the Frax expert here. So trying to interpret this, this is the backing of Frax stablecoin, right?
No, this is like everything. This is like everything that Frax owns and issues.
Is their balance sheet? There's no Frax ETH?
Oh, it's there. Yeah. So down here, they actually have the individual statistics down here. So you can type in, let me see, like Frax ETH, right? And so there's $38,000 or $38 million, which has been lent against Stake Frax ETH. They own $7 million of Stake Frax ETH. And then
this is their balance sheet. This is their lent, owned from an organizational type standpoint.
Yeah.
Yeah.
So it's got a nice breakdown. You can see every single asset, how it lines up, what the liabilities are, and what stacks up against it.
balance
Yeah,
sheet,
so-
assets and liabilities.
The question I have, and I think you've explained this to me before, but so there's $1 billion in Frax issued, and 750 million Frax USD is owned by Frax itself. Is that Frax backing Frax?
No, it's the So it's the Frax that's in the Curve AMO.
Oh, okay.
So all USDC that comes in gets issued through the Curve AMO. You can just type in Frax USD and look at the big pools. So like there's $300 million worth of Frax staked in the Frax Convex Frax base pool, along with another $139 million of USDC. And then like the Frax Curve 3 pool, like the Frax PP pool. And you can see how all those assets break down and where those liabilities are. And so essentially anybody that's like swapping out of Frax through the Curve pool, which is the like only way to get out of Frax, would essentially transfer their liabilities, swap it out for one of the assets, and then they both disappear.
Because the AMOs can burn it. It's quite profound from a POL standpoint, the capacity to create, issue, and destroy liabilities to manage public-facing liquidity.
Yeah, a couple of surprising things for me was digging into the volatile assets. So like looking at the like the crypto tokens that they have inside the treasury. So obviously I actually thought they would have more Convex and Curve. They only have $19 million of it, which Garrett, you can
In GMI.
and not going to make it with name. I thought they would have more. I thought there was like $30 to $50 million worth of Convex, but maybe I was just overstating things. Additionally, there is some like WETH, WBTC, $1 million of GON, which is interesting. And then also a bunch of airdrops. So like Sin and like Thena, ARB, $600,000 worth of ARB, $600,000 worth of Zigzag, $600,000 worth of Wrap Mover and Glimmer as well too.
No Pepe.
I didn't know about. No Pepe, not yet. So there's a lot of like stuff that I actually didn't know about, but I found digging into the balance sheet. You can come check it out. It's at fax.frax.finance. And this was actually the second balance sheet that was released after the FPI balance sheet. So this was the first one. This was like a smaller version of the broader Frax balance sheet, but this one only covered the FPI token. So now that there's a balance sheet for the Frax stablecoin, I think this hopefully drives a lot of interest and like positive sentiment.
I mean, talk about what the SEC is not doing well. This takes the concept of disclosures and says what the entire financial industry is doing is inadequate. Block by block balance sheet, real-time updates.
Yeah.
Come on, Wall Street. I want to see every second of every day what your exact balance sheet is. They couldn't comply. This is beyond compliance. This is beyond disclosure. And this exudes competence and it exudes trustworthiness. Look at the effort that was required to wire this.
Mm-hmm. Yeah, and I didn't really understand the magnitude of what had been built until I had a couple of investor friends of mine that are kind of like crypto adjacent, like writing me, being like, "This is mind blowing," because normally they're on a quarterly basis. You don't have insight into a company for 3 months, and then you get a little peek. And here it's radical transparency, and I think it goes along with the ethos of both what ETH and Bitcoin have like espoused for as long as they have. And when you're fully on chain, this is what you can do, right?
That's right.
So that's enough of me shilling Frax. You can also come. You can also come to flat.
Do you think you could build one of these for BlackRock?
Oh my God.
Yeah, maybe Larry will see this and be impressed. So
they don't have the data. It's not possible. It's what I was talking about it briefly the other day about the central banks and really what's playing out with the IMF and stuff, and how the central banks want to collapse the banking industry. Because when you're a central bank, brief digression, if you have 5,000 banks that are all managing assets and liabilities and all this cash flow and transaction volume, and you're a central bank and you got to manage liquidity in the system, you can't do it. You don't have the data. You don't literally just don't have the data flow to know what all the cash is doing.
Mhm.
This type of concept that we just saw is something they couldn't even do if they wanted to do, unless they collapse the regional banks into the GSIBs, and then the GSIBs could crank out 6 oracles and feed it into the central bank to produce a screen like that.
Yeah.
I mean, a lot don't want this transparency, right? Like
Correct.
a lot are like on the precipice of going under and need the shady accounting.
Correct.
Like, but just imagine the banking crisis wouldn't have happened if every bank had this.
You could, if you could act before, you could see it and respond to it prior to an event occurring. That's right.
Or just any of the other stuff like with Celsius or FTX or anything. Like imagine if they had a live balance sheet that you could see every single like deposit asset and liability that they had. Like they never would have been able to commit the fraud that they perpetrated.
Yeah, personally, HTM is just a ridiculous notion. That's the antithesis of like a llama oracle, where you're able to have real-time liquidation, buys and sells, to make sure the books balance. The balance sheet is actually solvent. So HTM and that balance sheet trick they've talked about. Oh my.
So that's going to wrap it up for today. I wanted to talk a little bit about Frax, but that was fun, guys. Noah, thank you for coming on. Wimoon, always glad to have you. And Garrett, we missed you yesterday. Garrett's muted.
I missed it too. I had to speak, but it was great to connect to people at ETH Barcelona. So thanks for everyone for stopping by the panel last night. Good stuff. And we'll be in Barcelona for a few more days, enjoying the Rambla, enjoying some empanadas, paella. Let me know where I should hit up.
Garrett, what's your conference attire? Do you go in a suit?
No, not anymore. Everyone thinks of like a undercover SEC agent when I go in a suit.
The Fed.
Hello, fellow kids.
All right. Well, thanks everybody for tuning in. Shout out Slindo with the Creatures NFT PFP. Great to see you here. Thanks for coming in. We like the comments. Please leave more comments. We'll respond to you. This is a live stream, so we're happy to be live and answer your questions. We will see you again tomorrow on July 7th for another stream. And peace out, squids.
Cheers, guys.